morning, Ian. Thank you very much for joining us. You've announced this morning an international peer-to-peer fintech funding capability. It sounds an interesting development. What's the thinking behind this initiative?
Well, yes, good morning. We're currently executing against the strategy we laid out in 2014, and one objective in that strategy was to become more digitally capable. We're making good progress with our own internal digital capability initiative in the form of the Platform One project. But what this initiative does with Mintos is to harness the benefit of digital capability externally. So in short, it's just implementing another step in our overall strategic plan to expand and improve the range of the group.
And what does the Mintos funding offer 1PM?
Three things essentially. Firstly, we currently write some working capital loans on our own book entirely out of our own cash flow. And what Mintos offers us is the ability to generate investment in those loans, thus bringing cash back into the group that we can write more loans with. So it's a leverage effect. The second is that the investors are individual retail investors, and that's a source of funding we're not currently accessing. And then thirdly, it extends our reach beyond the shores of the UK, of course, to an international group of investors that we wouldn't otherwise access than through digital capability.
So does it give 1PM a sharper competitive edge?
Yes, I believe it does. And what we're doing here is harnessing the power of peer-to-peer technology without increasing our risk profile. So without reinventing platform technology ourselves or developing it internally or even acquiring an expensive platform, we're able to enter into this alliance, this collaboration, and get the benefits of a fully developed platform immediately without increasing our bad debt risk. And so I think that does increase the competitive edge in the marketplace. Yeah, sure.
When will you first start to use the funds through Mintos? How long will it take to start them coming through?
Well, we can begin the process immediately. We have some loans ready to place onto the Mintos marketplace now. So in theory, we can see investment coming through from day one. As I mentioned, it's a fully developed platform. They have some 30 loan originators globally, businesses similar to ourselves, and some 50,000 investors. We've entered into a 6-month cooperation agreement initially, just to assess the technology and to assess the take-up and see how well it goes. But we can begin to source funds from them straight away.
And what are the commercial terms and the economics of this initiative?
Well, best probably to think of it in the form of a simple example. So if we were to write, say, a £100,000 loan at an 18% interest rate over 12 months, clearly our own profit would be £18,000 over that 12-month period. What we do by placing that loan into the Mintos marketplace is generate, say, up to 90% of that investment in terms of cash coming back in, so £90,000 coming back to us, which we can then reinvest in a second loan, and so it goes on. We could put that second loan onto the Mintos marketplace and get some cash back to reinvest. So it's a classic leverage effect. The interest rate that we're paying the underlying investor is higher than we would normally pay to other sources of funds at present, so between 8 and 11%. So the margin on each individual loan is lower, but the leverage effect means that over that 12-month period, we will be increasing the absolute amount of profit that the company will generate. And our estimates are that we could probably achieve up to 40% of additional profit through the leverage effect of writing more loans.
And what amount of funds would you imagine that you will borrow through Mintos in this initial 6-month period?
Well, that's the interesting question. That's why we've entered into a cooperation agreement. Our obligation is to place just €250,000 worth of loans on the marketplace. And by the way, the loans that we'll place will all be in sterling. There's no currency risk. But the minimum commitment is €250,000 worth of loans. And we can do that in probably a 2-month period, so well within our capability within the trial period. How much of those loans get taken up in terms of investment by the underlying investors is yet to be seen. Again, that's one of the reasons for it being a trial period. But we're very confident we'll be able to secure investment. The benefits for Mintos in us entering into this arrangement is that they don't have a UK-based and a sterling loan originator, which is one of the reasons they're attracted to working with us. And we understand that there are a good proportion of their investors are UK-based investors who will be attracted to the opportunity to invest in sterling loans.
What difference will it make to revenue and profits for 1PM?
Well, as with the example that I set out, it'll increase the absolute amount of profit that we will generate from the types of loans that we can place onto the Mintos marketplace. And the other key point is that we'll be placing these loans on a non-recourse basis. So that means that we won't suffer the default risk for these loans. The underlying investors will take up that bad debt and default risk. So the underlying benefit to 1PM is an increase in absolute profits and avoiding or passing on the bad debt risk.
And going forward, what's next on the fintech front?
Well, as mentioned, this initiative helps us to harness external digital capability. We're also progressing with the internal project. That's our Platform One project. And there are some key stages of implementation coming up soon. That project should be essentially complete during the course of this calendar year. So what's next is to look forward to the efficiencies and the synergies that we'll generate from the improved systems capability within the current businesses in the group.
Tremendous, Ian. Thank you very, very much for a very comprehensive update.
Thank you.